afternoon and welcome. You're watching the Business Today show. This is the market closing show just a few minutes before the markets close. First up, let's take a look at what's hot in the corporate and the financial world. Commerce Minister Piyush Goyal hits back at the opposition in Parliament, saying India firmly protected against its sensitive sectors in India-US trade deal. Remember, he's also said agriculture and dairy interests remain safeguarded after a year-long negotiation process. After yesterday's sharp rally on the Indian stock markets, we've seen on the back of the India-US trade deal, markets have now turned choppy. Nifty is hovering around 25,800 mark. The Sensex is up by just about 100 points at 83,900. We are seeing buying in oil and gas stocks as well as the consumer durable stocks. MCX gold and silver rally sharply as global gold jumps over 2% on a weaker dollar. Silver surges 14,000 rupees to 2.82 lakh rupees per kilogram, and gold gains 7,000 rupees to now trade at 1.6 lakh rupees per 10 grams, while the rupee has extended a rebound against the dollar. IT stocks plunge as AI fears intensify. Nifty IT index tanks over 6% after Anthropic's new AI tools trigger a global software sell-off. HCL Tech, Infosys, Wipro, Persistent Systems, they all slide up to 7% as AI concerns wipe out 2 lakh crore rupees in market value from top IT stocks. Hindustan Aeronautics shares tumble up to 8% after it misses the shortlist for India's stealth fighter jet project. As per media reports, Tata Advanced Systems L&T as well as Bharat Forge are shortlisted to build the next generation fighter aircraft, with the final winner due in 3 months. Straight away looking at the big breaking news coming up on your screens, viewers. This is as far as Sebi chief is concerned. He's clarified on the derivatives market. Sebi chief has said no new restrictions are being placed on F&O trade for now. No changes in weekly expiry. He's also refused to comment on the STT hike. He did say methodological approach to equity derivatives are being seen, but no new changes as far as the weekly expiry is concerned, or no new restriction on F&O trade, at least for now, can be seen. This should be able to give some respite to the derivatives market, which have been reeling under some pressure from the STT hike that was announced on the union budget day as well. Right now, the Nifty is at 0.2% higher, but let's quickly welcome our guest on board. Let's first also listen to Mr. Tuhin Kanta Pandey as to what he had to say, and then we'll go to our guest.
When we, as a regulator, we are looking at derivative markets in a very methodical manner and based on data and others. And at this moment, we are not contemplating any measures. And whatever framework that we have put in place, that will continue. When you have a overhang of a regulatory action which is removed and trade frictions removed, so any capital formation is always accelerated with the removal of, number one, uncertainties. Number two, the investment decisions will be spurred, and there will be a greater predictability on the capital to go for that. And it will also have salutary movements on the exchange rate, which also bring in stability and predictability. So in the overall situation, I would say that with the deals that have been done on the trade side, a lot of uncertainties have been removed.
Let's quickly welcome our guest on board, Mr. Sudeep Bandopadhyay, the Group Chairman of Indie Trade Capital, is now joining in to share his views on the markets. Welcome to you, sir. Good to have you with us yet again. 2 big days and 2 big events have passed by us. It's the union budget as well as the US-India trade deal. Just when least everybody was expecting it, the deal has been announced. Do you see a big overhang from the Indian markets getting lifted? We did see a knee-jerk positive reaction yesterday. Today, sustaining that rally has become slightly difficult for the markets, but how do you see these 2 major events, and what kind of an impact do you see for the markets now?
Well, getting the trade deal done was definitely excellent news for Indian capital market and Indian economy perspective. I think this was a huge overhang on our markets. And the moment the trade deal announcement came, I think the market gave it a big thumbs up. All the markets, you look at the currency, look at capital market, look at bond market, everywhere there was excitement. And I think, rightly so. Of course, this was majorly sentiment positive. Actual reality on ground will take time to improve. And I think market is realizing and giving weight to that. And that's the reason why we are seeing some amount of correction and pulls and pressures building up yesterday, second half, as well as today in the market. I think we will be driven to a great extent by the fundamentals, but the hope will be that going forward, FIIs will start participating in Indian markets in a much better and bigger way, which should be good for Indian capital markets in the medium to long term.
In fact, speaking at the Lok Sabha on the India-US trade deal, Commerce Minister Piyush Goyal has also said that India has firmly protected its sensitive sectors in India-US trade deal. He says that agriculture as well as dairy interests, they remain safeguarded after a year-long negotiation process. Let's listen into what he had to say.
India and the US have been engaged in regular discussions with the objective of concluding a balanced and mutually beneficial bilateral trade agreement. With this in view, the negotiating teams of the two sides have engaged intensively over the last year at various levels. Given the significant and varied interests of the two sides, it is natural that both sides would want to ensure the best possible outcome while safeguarding critical and sensitive sectors in their respective economies. During the course of these negotiations, the Indian side was able to do this, in particular, by ensuring that the interests of our agriculture and dairy sectors were protected. The US side too had areas that were sensitive from its point of view. Following a nearly year-long discussion spread over many rounds, the two negotiating teams were able to narrow their differences significantly and finalize several areas of the bilateral trade agreement.
Let me go across to Mr. Bandopadhyay and try and understand by way of the caveats that Mr. Donald Trump had put out when he announced the deal, as well as how do we really look forward to what's happening in key sectors post the deal. One announcement was, yes, 18%. The big question mark is that, is it a blanket 18%? Will it be to select sectors? Second, he's mentioned that, yes, India has agreed to stop buying Russian oil completely. He's also marked that, we are committed to a $500 billion worth of trade with the US. Then he's also pointed out and said that, we are going to be buying more from America at the higher prices. So how are you reading into these conditions that were put out?
I think there was a lot of pressure on US to complete the trade deal once India and EU signed their deal. So I think, this worked out reasonably well for India. I'm pretty confident that as Mr. Piyush Goyal, Commerce Minister, has outlined, the sensitive sectors as far as India are concerned have been protected, which is agriculture, dairy, and the likes. So as far as we are concerned, India should be fine. There is significant benefit for some of the labor-intensive sectors which got really affected, which is textiles, gems and jewelry, fisheries. I think these are heavily labor-intensive sectors, and they were significantly impacted. Now they are better off compared to even the, some other Southeast Asian countries which have a slightly higher tariff rate in the US. So this is definitely beneficial for India. As far as $500 billion worth of goods to be purchased by India from US, I think that includes oil and gas, which India anyway purchases, which also includes aircraft parts, components, and aircrafts. Again, these are regular purchases for India, so this is good. And I also understand that this 500 billion is going to be spread over a number of years. It is not that it is going to happen, tomorrow morning or in one shot. It is going to be spread over a period of time, so that's also good. As far as Russian oil is concerned, I will wait for some clarification to come from the Indian side or the detailed press statement which comes out when the deal is actually signed, because not a single word has been spoken by anybody from India regarding Russian oil purchase, reduction thereof, or anything related to that.
Right. One of the key sectors that has seen a pause after the rally is the IT sector. And of course, we've seen a global rout as far as the IT sector is concerned. There are fresh fears rising from Anthropic's new AI tools launch, which indicates that most of the sectors or industries that were so far thought to be safe from AI disruption may also be replaced, such as data analysis, the services, the traditional services space as well, a legal space too. And that's why we've seen 2 lakh crore rupees wiped off from the market cap of the IT stocks today. The index itself is down by over 6%. How are you looking at this disruption? Is it again knee-jerk? Do you think these are fears that are deeper than that we had thought of? Are we overreacting? How would you explain to an average investor?
Well, I don't think this is an overreaction, Sakshi. In fact, I had repeatedly told in multiple interactions with even you that I'm deeply concerned about Indian IT structurally, and I have mentioned repeatedly that AI is something which unfortunately Indian IT companies haven't got their own tools, and they are depending on external tools, and this is going to have a significant impact on their margins. This has been my view for the last 1 year. And I think we are getting the same, seeing the same getting played out. The Anthropic tool, which has been launched, now definitely will have an impact on Indian IT services companies. You mentioned legal services, and similarly you can extend to many other similar such services, which definitely will get impacted. Now there will be impact on people, because we won't need so many people which we were needing earlier. There will be significant impact on margins and the way the businesses were being conducted by Indian IT and IT services companies. So I think I will be very, very cautious, and I have been maintaining this view for some time. As far as Indian IT companies are concerned, I continue to maintain my view that we should look at Indian IT companies which are servicing specific niche areas.
Yes.
Let's say travel and tourism. Somebody is servicing travel and tourism, which is booming. Look at that company. Somebody is servicing the transition which is happening in automobile from ICE to EV. A lot of IT companies are working in that space. Focus on those companies. Those are growth areas, and those can be looked at.
Fair point. Let's also look at the defense space that's in focus, especially Hindustan Aeronautics shares that have tumbled in trade today. And this is after the media report suggests it has missed the shortlist for India's stealth fighter jet project. Tata Advanced Systems, L&T and Bharat Forge are reportedly shortlisted to build the next generation fighter aircraft, with a final winner due in some months as well. Joining in now with more details is my colleague Shivani Sharma. Shivani, what do you think is the reason why HAL has not been shortlisted?
Sakshi, it's very important to mention that there were 7 companies who had given their documents, their bids for this stealth program, the AMCA, the Advanced Medium Combat Aircraft program, that happens to be one of the most important, the biggest fighter jet programs of India. And the outstanding order was one of the factors which was considered. And when it comes to HAL, we know that the Tejas deliveries are still awaited. And there were several other standards also on which the reviews was done. So finally what we've learned, that HAL has lost out on this race, and this would be the first time when HAL will not be a part of the biggest fighter jet program. We know that it has been manufacturing fighters for Indian Air Force since decades. It has been a part of almost all these major programs, but this would be the first time when it will not be a part of the AMCA program, that happens to be one of the biggest programs of India's fighter stealth technologies. And L&T, Bharat Forge and Tata Advanced Space, they have been given these, they've been shortlisted in fact for the next level, and then within 3 months, one company will be shortlisted.
Fantastic. Shivani, thanks for giving us all those details. Remember, HAL has been knocked out of the race to develop India's fifth generation stealth fighter jet, or the AMCA, that's the Advanced Medium Combat Aircraft program. But L&T, Bharat Forge, they've been shortlisted, Tata Advanced Systems as well. Staying with the aviation story, there's breaking news coming in on your screens, viewers. Indigo has suspended Copenhagen flights from February 17th. Indigo has cut Delhi-London, Delhi-Manchester flights also. Indigo has revised the long-haul flight schedule. Indigo has also reduced the key Europe flight services. Remember, Indigo flights are impacted by operational issues, and therefore the reason why you are seeing a change in the long-haul flight schedule. And therefore, from 17th of February, Indigo has suspended Copenhagen flights. They are going to be cutting down the Delhi-London and the Delhi-Manchester flights as well. And now this is definitely going to be seen whether there will be lesser flights, whether the other airlines will be able to take the loads there. And that's something that passengers would be interested in finding out. Let me come to Mr. Bandopadhyay and try and understand. We have seen in the last couple of months Indigo go through a series of trouble. None of us can forget the recent images of, airline airports where a lot of luggages were just kept stranded. People were kept waiting. There were flight delays, cancellations that everybody has been seeing. And this was all, because of the kind of resource pressure that Indigo was facing. Finally, Indigo is now cutting down on its long-haul flights. It is cutting down the frequency of flights, and somehow on Copenhagen, they're completely suspending it since from February 17. How are you looking at this step?
Well, I think a little unfortunate from Indigo point of view, because international flights are normally significantly revenue accretive, and they have a better margin profile compared to domestic runs. So I'm sure there will be some reason. As far as Copenhagen is concerned, I suspect that the traffic, the load factor may have been a reason. As far as London-Manchester flights, if they are suspending those, I'm sure there are some technical issues or some such issues which must have cropped up, compelling them to suspend those flights. Because I'm pretty confident that these were high-margin flights from Indigo point of view, and this suspension will definitely have an impact on their P&L. They've just come out of that massive domestic turbulence which they went through in December, early December. And I think they are yet to fully stabilize the system, and probably some pressure somewhere would have led to them suspending some international flights to kind of get a better grip on the entire operating metrics.
Okay, so that's as far as Indigo is concerned. The stock is ending the session just mildly higher in trade, but there could be a large impact on the P&L, as Mr. Bandopadhyay has indicated, because these long-haul flights are margin accretive for the company as well. The markets have shut shop, viewers, 0.04% higher, 25,776 on the Nifty is what you see. Of course, apart from this, the Nifty Bank, financial services, private banks, they have all supported the rally. The Nifty Bank slightly better off than the Nifty, 0.3% higher. Broader markets slightly better off as well. You can see, in fact, the small caps up by over 1%. So that's where the move has happened among the sectors. You clearly see the metals on your screen up by 1.2%. You also have the oil and gas that's in fact moved by over 2% in trade as well. Infrastructure stocks have also rallied over 1%. But IT stocks now ending the session just about 6% lower in trade after that huge carnage is what we have seen. Remains to be seen whether the companies will come out and talk about whether there will be a serious impact on the IT sector and their margins going forward because of such heightened competition from AI. These are the top gainers on your screen. Zomato is the top mover with over 5% gains. You can see Trent about 5% higher. It was gaining right ahead of earnings. ONGC about 3.8% higher as well. These are some of the big names that are moving the street. You can see NTPC, Adani Ports and Power Grid. Power space also garnering more space at this point in time. But let's shift focus to your questions now, viewers. Of course, the laggards, there's no guessing there. Infosys, TCS and HCL Tech continue to decline. That was what we have discussed largely. in the session as well. But we'll take some of your questions now, viewers. Prerna from Mumbai has sent the first question from Mr. Bandopadhyay and wants to know, is it a good time to invest in defense stocks? Where we did hear our colleague Shivani point out to the fact that HAL has declined because of being knocked out of the race there. But defense stocks as a whole, we've seen an outlay in the budget, Mr. Bandopadhyay. Do you see any upside momentum for defense stocks? Is it a good time?
Oh, absolutely. I think, defense is a long-term game. And I have been mentioning this again and again, that if you're buying a defense stock, be in the stock for a time. Now, as far as buying currently is concerned, my view is that if you have to buy defense, go for the private sector companies, which are becoming big players. I mean, today the news is out, but I have been recommending Larsen & Toubro from a defense point of view also. And I think today the aircraft order, they have been shortlisted. I have been recommending Bharat Forge. They have lost, significant defense ambitions, and they're already growing their defense book. Now, of course, today they have been shortlisted again, so I don't know whether they will win this order or not. But otherwise, also, I think both Larsen & Toubro and Bharat Forge can be picked up at current levels from a 1 year plus kind of a hold.
All right. Sarthak from Delhi says, Mr. Bandopadhyay, does this fall in IT stocks create an opportunity to buy into quality shares?
Well, I don't know what you mean by quality shares. All these are, of course, very well-managed companies. But at this stage, I don't recommend buying into some of the frontline IT companies. There are a lot of turbulence ahead for these companies. Look, these are good companies. Even today, they are 4-5% dividend yield companies. They keep doing buybacks. They are well-managed companies. But the business environment has become too complex at this stage. And these companies are yet to get a grip on the new paradigm or the paradigm shift which is happening. So I would wait and watch the entire space before recommending a buy. If you have to buy niche IT companies, which I talked about already.
Right. Last question that we have is from Sanjeev from Thane. He wants to know from you, after the return of FIIs, are markets entering a bull phase, or should we still remain cautious? When we are still waiting to see whether FIIs are returning for good and sustainably so, some more data will have to be read. But Mr. Bandopadhyay, do you see there is a case for FIIs to meaningfully return to the street, and do we see the markets going on a better path from here?
One of the constraints which the FIIs definitely had was India-US trade deal not happening. That has been removed, and that definitely is a positive. But having said that, I don't believe that FII will be rushing to Indian markets. Look, I think the valuations in India are still significantly more expensive compared to other competing markets, whether it's a South Korea or a Taiwan, China, Japan even. So I think FIIs will be careful in getting into India. There is pressure on currency. There are challenges as far as corporate earnings and valuation are concerned. So FIIs will be, I understand and I believe that they will be getting into the Indian market, but very slowly. They will start buying into large cap companies initially, but again, that should happen very slowly. So don't bet on big bang return of FIIs immediately. They will come in slowly and steady.
Okay, Mr. Bandopadhyay, always a pleasure to have you with us. Thank you so much for being with us and sharing your wonderful insights and answering all those queries of our viewers as well. And in case viewers, you too have any questions about your investments in mutual funds, SIPs, stocks or gold-related queries, then please do send them to us on the number that's flashing on your screens. We'll be happy to address that with our top guest joining in. And don't forget to tune in tomorrow morning at 9 a.m. for all the market opening action with Abha Bakaya.